So Joshua, what is the role of gold in a client's portfolio?
People buy gold for a few reasons. Gold is used for portfolio diversification. People invest about 5 to 10% of their portfolio in gold because this investment in gold shows to reduce the risk on one's portfolio. So it's a diversification strategy. You buy gold, and because it has inverse correlation to the financial markets, then usually it will gain value while the other assets are losing value. Other reasons is gold is a very liquid global currency, in a way like crypto to some extent. It's not issued by any government, there's no counterparty risk, and it's recognized globally. It's very liquid, you can take your gold, physical gold, anywhere in the world, sell it, liquidate it for your local currency. A couple of other reasons, the fact gold is still part of our monetary systems. Central banks are buying gold in bigger and bigger quantities and in quicker pace. The reason is the governments know that their currencies should be based on some gold holdings in the central banks. And of course the last one is gold has a very good demand. It's a very liquid market. If you look at the demand in general, physical gold is consumed mostly by jewelry and central banks for investment and for industrial use. So at the end of the day, what we say, if the economy is good, people buy jewelry, gold jewelry. When the economy is bad, people buy gold for investment, and central bank buy for investment. So there's always very, very firm demand for gold, which means it's a very, very liquid asset. So, and obviously now in times of high inflation, gold is a great hedge against inflation. Why? Because it keeps the value of our money. If you get cash value is going down, and the higher the inflation is, actually the value of our money, fiat money, deteriorates in further. Gold keeps its purchase power, meaning we could buy, with 1 ounce of gold, we could buy the same thing or even more than what you could have bought 10 years ago, 20 years ago, or even 6 months ago. Because it's really about store value, about being able to maintain the value of our money.
What are the specific reasons that clients buy physical gold?
So the reason generally people buy gold, especially now, we live in a very unstable, unpredicted, and volatile world. If you look at what happened since 2020, since the COVID and all the events that happened later, the hike in the interest rates, the growing concerns around the debt in the US, geopolitical changes, of course the war in Ukraine, the tensions between China or the decoupling between China and the US or generally the Western countries. We really live in a volatile and unpredicted world. And what we see, what clients see now is how useful gold is, especially during these periods. Even if you look at the performance of gold, let's say during COVID 2020, gold went up 23% in dollar terms. Gold went up, actually did year to date in 2022, gold depreciated in pound almost 12% because the economy in the UK was quite bad. So overall, clients are more concerned now with these specific issues. Where are we heading in terms of geopolitics, in terms of economy, in terms of inflation? And it helps them kind of understand more and more the importance of gold. But the reason I mentioned before are more the general kind of that's good all the time. But we see, especially since COVID, people see the value of their investment is going down 20%. I got my MPF in Hong Kong lost 20% of its value because they invested in the local stock exchange in 2022. My gold portfolio actually appreciated. So you can see, clients can see the difference and why gold is so powerful, especially in volatile times like now. Now the reason people look at physical gold versus ETFs or paper gold is the fact of security. The reason is security. With physical gold you don't have counterparty risk. You hold the assets, you store it, it's yours. When you buy paper gold, you're actually buying a promissory note. You buy a unit trust issued by a third party that guarantees to give you that price of gold in the future when you liquidate it. Now, if your concern is like many of the investors today of systematic risk in the financial system or over leverage of existing gold holdings or debt issues in the US or other countries, then of course this will not, buying paper gold will not cut it. Because people want the safety, they want the security, they want to be able to know that they don't have counterparty risk. If something happens tomorrow, there's a meltdown in the market, There's a bank going bankrupt, like we see now, they can still go and redeem their gold without any issues. Now, the question is probably people ask, so how do you buy physical gold? It sounds like very complicated and cumbersome to go and look for it. So the best advice I could give is don't go to the street shops, the street retails. Do a little bit of research. So the physical market or the gold market is still monitored by the London Bullion Market Association. The refiners, the products need to be refined by refiners and mints that are members of the London Bullion Market Association, the LBMA. The logistic companies, the dealers should be members of the LBMA. So we work in a tight ecosystem that provide this solution in a very professional manner. When you go and buy it at a shop, you'll pay high premiums on the product, on your investment, and you may have issues selling it later. So what we say to clients, especially to high net worth clients, or at least people who want to invest more than $100,000, which is our minimum, is come to us or companies like us that can provide you the entire solution. Source the gold from reputable refinery, transport it, store it in a good private vault location that is safe, that has insurance coverage. Don't put it in your house, in your safe deposit, in your house, in a home safe that can be broken into or stolen. Make it a professional investment. Put it with companies that have insurance policy, they have storage facilities, and that can provide you the entire service from start to finish. Today you have professional storage facilities in all the major centers. For us, we are a Hong Kong and Singapore based company. So we of course focused in Asia. I would say the strongest demand we've seen in the last few years is for storage in Singapore because of its safety, stability, and the good infrastructure for trading gold and storing it. But of course, Hong Kong is still a great place to store gold. And we see growing demand, of course, for Zurich and Geneva. Switzerland is, at the end of the day, a great gold hub, has been a gold trading hub for decades. We are seeing also clients diversifying. So we see clients put in Frankfurt, for example, UK. We have growing a number of clients storing in Canada, actually in Toronto. And we have clients that want to move their assets to Sydney. For me, the idea of storage is where the client feels safe. We cannot tell a client, oh, Singapore is great, Hong Kong is not safe, or Zurich is great, or London is not safe. It's where the client feels it's safe, and a lot of the time, whether the client has access to their holdings. Especially since COVID, when travel was restricted, we had clients that got locked outside of their gold. So if you store it with a professional company like us, and you reside in Europe, you can still sell your holdings that are in Switzerland or in Singapore. But if you're residing in Europe and you store it in a safe deposit box in a bank in Singapore, and there's travel restrictions, you cannot take your gold.
And Joshua, what has been the impact of some of the recent banking issues?
So we saw now a lot of question about stability of banking systems, whether in the US and Switzerland. Credit Suisse is, of course, the big name that comes to mind. The immediate, I would say, reaction of clients is to try and get assets outside the banking systems, which leads us to the question whether it's okay to store. Why would you store your gold in a bank's vault? At the end of the day, and again, more clients realize it now because of the issues with the banking system, that gold is your safe money. It's your insurance policy for rainy day, for times when there's crisis. You don't want to keep it with a bank because it may not be safe. There are systematic risks when you put it in a bank because all our financial assets anyhow are within the banking system. So I think this safe portion, this 5 to 10% of physical gold should be kept separate to your financial assets in a non-bank private vault. And there are many options globally, other than Rotbart Co. There are other companies globally that offer these services, but clients understand more and more, and that's the immediate, I think, reaction to those kind of collapse of various banks, is get my gold out of the banking system. I don't know what's going to happen if my bank is folded. I need to get this money outside the banking system. And that's what we do at Rotbart Co.
And Joshua, what's the connectivity today between crypto and physical gold?
To be very direct, there's no connectivity between crypto and gold. There's a lot of There used to be a lot of talks around Bitcoin being the new gold, Bitcoin being a store of value, but we know now as we get the data and we see the price behavior of Bitcoin, that actually Bitcoin is usually correlates with the financial markets and usually is not a good store of value. So I think the question that a crypto investor had in the beginning of the crypto buzz, whether it can replace gold, I think this is the answer we know is negative. Bitcoin cannot replace gold. Having said that, we do see a lot of clients that as part of the diversification, they have gold as a safe asset and they have crypto as the more, I would say, risky asset with high, I would say, high potential for gains. And what we see in our activity, a lot of clients that come to us because either they want to convert from the volatile world of crypto to stable world of gold, or sometimes vice versa. They want to move from gold because they believe there's another boom coming to the market. Now, of course, it's a matter of timing in the market. We haven't seen too many clients moving from from gold to crypto in the last, I would say, year. Obviously, if you look at the price of Bitcoin, it hasn't done well. We've seen more clients actually moving from crypto to gold. But of course, we know that this may change. So we're keeping our options for clients to do both of these transfers between those two assets. But definitely the one thing we do see is that clients are more open to have both assets rather than just one of them. So if you're crypto investors, you're open to having gold now. If you're a gold investor, you say, maybe I should have some crypto in my portfolio.
And Joshua, can clients borrow against physical gold?
Mostly since COVID, since the pandemic started in late 2019, we had requests from clients that actually needed some cash flow, either to buy other assets that was at a bargain price, if you'd like, or they needed cash for their businesses because it was shut down due to COVID restraints and so on. However, those clients didn't want to sell their gold portfolio because obviously gold was doing very well during COVID and since then. So we came up with a solution of lending clients money using their precious metals holdings as collateral. And the process is very simple. Clients can bring either existing bullion or buy new bullion from us. We can store it for them in any of the locations we store gold at, with our 12 locations globally that we can store the gold at. And they can take up to 85% of the value of their portfolio as a loan. Now, of course, because we are not a bank, and we spoke about the difference between buying gold via a bank and buying gold through private companies like us, because we are not a bank, of course, our terms are more flexible. We are not closing position, we're not very strict on closure of positions and margin calls. We have the rules, but we work with the client and understand what the client needs in order not to surprise them with requests for liquidation and so on. And another thing is, of course, that we do not limit the flow of the funds. Client can take a loan using their gold as collateral and invest it in any avenue he wants to do. So if clients have better investment or any opportunities in the market, that's one option. A lot of the time, the asset managers we work with the client will take a loan, the client will buy gold from us, will take a loan and reinvest it with the private bank or with the asset managers. So I think it's worked quite well from client point of view, from our partners in the private wealth industry, because they don't lose AUM. And of course, for us, it keeps everyone kind of in a win-win solution where the gold is there, it still appreciate 8 to 10% like gold appreciates every year, but they can still use the cash for other purposes.
And Joshua, how does that lending process work?
At Rotbart Company, we have a few companies in our group. One of our group is a money lending regulated business here in Hong Kong. So the technicalities around the lending arrangement is that Rotbart Co bullion company actually protects and custodies clients' holdings on behalf of the money lending company, which is again part of our group and is a licensed business here in Hong Kong. So it's a tri-party arrangement between the client and the two of our group companies. Basically saying clients is still the owner of the goods, but clients waives possession as long as the loan is not paid. In case the value of the gold goes down, for example, if we lend up to 85% of the gold's value, and the value and gold price dropped, let's say it's 7%, then we will have a margin call. We'll call the client and we'll say, you need to top up the collateral or pay back some of the loan. And we give them, of course, a few days. We work with the client. We're not a bank. We're very flexible in terms of early payment measures. Now, of course, if there's further depreciation in the price of gold, we will close the position and we will sell the gold and cover the loan. But I have to say, it never happened to us. Never happened to us for two reasons. One, gold's price is quite stable. For gold to lose 10% of its value in a few days, I think it happened last time, maybe in the 70s. So it doesn't happen to begin with. But also, our clients are usually clients, families and individuals that work with us for decades. We've been in this business for 13 years. So we want to maintain the relationship. So a lot of the time, even if legally we are allowed to close the position, we will work with the client and try to understand if there's a cash coming in anytime soon, assess our risk, and decide whether it's right to close the position or not. So far, actually, we haven't done that because there's enough margin there between the loan to value that we lend to clients and actually the price of gold. So again, we're quite flexible on this. Of course, we're not going to lose money. It's still a loan that needs to be paid. But of course, we will work with the client if there are any issues.